More deeper excursion, as I just said, around the 1900s. So we could get some temporary upside potential for the week. However, macro-wise, we want to look for predominantly short plays. Something like that could be very, very tangible, very valid. Hell, it might even clear out the 1920, very possible as well at those highs, because there's orders up there. Profitable traders are still profitable. Do you see where Cris has that zone highlighted at the 1920? We didn't get a deep excursion, so we know that there's still orders residing there. Any profitable traders, any pending orders that need to be there, they need to be flushed. They need to be cleaned out. That's why you're always getting
actually the above there. Do you see the top one, the top box that you've got on the chart at the moment?
This one?
Yeah, that one there. Yeah, you've got a lot of liquidity sitting there.
Yeah. But it's highly unlikely to come back there.
I agree.
At least not anytime soon. Why? Because look at that deep excursion you got outside there. Past the 1960, stop hunt. When price pulled back again, sold off, and it cleaned out more orders. So that level, that entire structure is already cleaned out, bro. Now we move on to the next part of the cycle. We already had our first impulsive move. What did we talk about in last time's training? So generally, when you get a break of structure of the high and you're looking for trend continuation plays, you'll get 2 to 3 cycles of that impulsive move. So it'll move, exhaust itself, or quote unquote consolidate. That is where we look for our entries. If you don't get it, big fucking deal. You wait for the next move. That second cycle, the impulsive move, it'll exhaust itself like we're seeing again. And then you look for more criteria. You're going through that filtering process. You're getting in that high selection, high quality selection of trades. And then as price presents that trading opportunity for us, we take it. And generally through this whole process of that trend continuation cycle, it'll move about 2 to 3 impulsive moves down or up, depending on, if it's a bi-week or sell week structure. So Sal, I know we're kind of moving really fast for you. This is just stuff that most of these guys already know. We'll touch up on these principles maybe a little bit later on, so you understand what we're talking about. But do you have any questions in terms of what we're talking about right now?
So far, no, man. The way I see it, currently we're downtrending, right? We're looking for a short play.
Yeah.
Yeah.
So we're looking to sell when those opportunities present themselves.
Yeah. So when there's like, for example, that little box you made all the way at the bottom, that tight range.
Yeah.
Do we always look, even though it's like a downtrend, do we look for like, let's say give you a stop hunt, like, do we look for both sides of the trades, like a short and a long, or we only look for a?
You can if you want to, if you're experienced enough. We don't recommend it to a lot of guys just starting off, because then you're just going to confuse yourself. But Cris and I, like we just said, if we are anticipating a stop hunt over the macro to the downside, what does that mean? That means price is going to move up before it goes down.
Yeah,
so
of course.
Look for short-term opportunities to flush into those orders. We'll do it. Hell yeah. And it'll mean we're more active and we'll maximize profit. But then there are moments where we call it milking the trade, meaning, dude, that we're just taking, and there have been moments where we have played a chart like nobody's business. So in this case, if we expect some upside, we can look for some short-term opportunities to flush into those orders. Look at that profit-taking candlestick right there. Or what do you think sellers would have done when they see that type of reaction off that level of
gone short, left their stop losses right above it?
Boom. And look at that massive bullish candle. That's implying that buying pressure is stepping in and it's ready to clean out those orders. So what we would do is, if we had the opportunity, we could use a 1 bar stop. Meaning, if you guys wanted to, you could long gold right now and put your stop right underneath that pullback. Or if you really don't feel that, if the move could like stop hunt that little range right there, maybe breach around the 1864. I don't know if you guys see that. If you guys want to get in a much more accurate entry, here's the problem with waiting though. Sometimes you may never get it. Price could breach the 1864, then you could get a much more precise entry and look to long it. But at the end of the day, you might not get it. Well, if you look at the hourly chart, that bullish candle, that hourly close, it's what we call a 1 bar stop, meaning you could take that as a trigger and just place your stop loss right underneath a couple ticks of that bar. Yeah. And then just look to take it where you think it's likely to go. And you could just get a 1-to-1 on that. based off the shitty entry. If you get a shitty entry, we always advise that you get a 1-to-1, bro. If you get a much more precise and accurate entry, whew, you're gonna be milking like, I don't know, 1-to-4s, 1-to-5s even.
Yeah, and check this out, Sal. For those short sellers who are shorting off this range right here, the moment that price reaches this area, they're gonna close their trade. And what happens if they're selling and they close their trade, it'll automatically cause some buying pressure. So that's how we may get this right here.
So what we're playing right here is that stop hunt that willing sellers. Got it.
Yeah. So we're trying to sell, but we're going to sell at the best price possible.
Got it. So at the moment, we're just focusing on that little stop hunt that is probable to happen to clear out those short sellers.
But to answer your question, with a little more experience, understanding all these factors, right? Understanding the macro and the micro. Yes, you can make money on both sides. For example, Cap made money this morning by longing this stop hunt right here, taking profit at this range. Nice. He can continue with the same idea. Maybe you may not get the chance for this stop hunt to happen over here because I know there's liquidity down here. So I don't know if it's going to happen. We may not get the chance. It might lure in some more buyers. We may get another trap and we may get something like this, which it continues going because you can see that there's money right here, right?
Yes.
Yeah, I've got my zones in my boxes in a different place than you, and it's concerning me that I've done that.
Yeah, so just to answer your question, so yeah, you can make money on going both ways, but you have to have these macro and micro views, and just a little more experience. But as long as you have a clear like roadmap of what you're trying to do with this pair and understanding the macro view, yes, you can make some money on
and sometimes it can be very difficult to do, man. That's why we always advise that you take it a step at a time. But what's helped me be able to be extremely efficient and fluid with everything that we're talking about. The reason Cris and I are very good at it, because there was a point in time where we were writing our ideas out in journals. That way it's always like our strategies were always there. Now it's like second nature. I'm telling you, we can look at a chart and we could instantly see, okay, how are we going to play this? What opportunities are presenting itself? And if we have that micro and macro perspective holistically in sync with each other, we're going to milk it both ways. Like you can do that if you're ready for it. Don't do it if you're not. Like, what I would advise is that you just wait for a short play. But if what we're discussing makes sense, dude, you just look to play this shit to the both sides, man.
Just manage your risk, of course, and make sure you take profit. Try to get the best entries, tight stop loss. Don't stick with your idea and like stay in red, stuff like that.
Sounds good.
Yeah.
So let's say we take. So since the trend is going short, we want to find a short. We look for that stop hunt to clear out those
willing sellers here, all these sellers right here.
Got it.
Yeah,
so we look to execute the trade all the way up here, where your mouse is at?
Wherever it could go. Generally, there's so many things that you have to take into consideration, bro. So the first couple steps that we deploy. I don't know if we went through our basic training video.
The key levels, the trend.
You always want to make sure that stuff is there first. And then the other questions that you need to ask yourself is, okay, where's the liquidity residing? Where are traders still profitable? What levels need to be cleared out? And you also need to ask yourself, okay, is price hovering around a key level? Is it nearby a key level? Could it go that far? And we said there's a possibility that it could go past the 1900. Why? Is because look at
there's a lot of liquidity up there.
Yeah, there's a bunch of liquidity there. Doesn't mean it'll go up there all the way, but there's a possibility that we would wait to see how far price goes before we make a decision and transact.
You see how it's been cleared out, Sal? Like these swings, like they weren't invalidated. These weren't invalidated either. So it could go up here. It could. But we have an idea where the best price available is.
Yeah, man, and that's all you're doing. You're just kind of hunting for that. You're asking yourself, where's the liquidity at? What traders are still profitable? How far can price go? What levels?
That is key, isn't it? That is key.
That is fucking. If you don't know that, you're not going to know how to maneuver through the market. So many traders get this wrong. They're just looking for technical patterns, technical setups, when that is the least of your fucking concerns. You need to focus on the sophistication of what you're looking at. Remember, the market is always leaving these crumb trails of clues for you. And the more that you can decipher those clues and put it into context for yourself, the more accurate you're going to be in your decision-making process and the better success you're going to have whenever you execute trades. And it's just asking those high-quality questions. Okay, you got your levels deployed. You got your trend lines deployed, all of that shit. Now, that's the least of your concerns. You have to ask yourself, okay, now you need to formulate your bias. The way you're going to formulate your bias is then by going through like, okay, did the market have a break of structure? Where did that break of structure occur? At the highs or at the lows? If it happened in the highs, in the case of gold, that means we are in a sell weak structure until further notice, until we get an accumulation zone or a break of structure at the lows. And then, as I said, we'll probably get that break of structure or accumulation zone once we get more selling occur in gold. But that is not important right now. That is up until it happens. But right now, on the balance of probabilities, we got that.
How long in time do you expect the accumulation to go on for?
That it could happen for a couple days, man. It could happen in a day, instantaneously, depends. But as we said, this is just a frame of reference, is that based off that we're getting this massive selling structure at those highs, we are barely in the first stage of the cycle. We could expect about another, maybe a second or third impulse move to the downside. And it's just hard. Like, we're never going to have that.
You're asking a question, Cap, in which we need a crystal ball and we don't have it, but we have an idea.
All we can do is just roll with the punches. But off our back testing, Cap, we can expect maybe another impulse move or a third one to the downside before we get more upside. And all of that, all of this process can happen in a week, 2 weeks, maybe by the end of the month. Moving forward into next month, the point is we will know it when we see it, but we have to be quick to take our profits, because like, as long as we have our ideas, we're going to make money from a fucking pair. Like, we're going to make money, man. And I think you're less stressed out about what the fuck a chart is going to do as long as you're locking in your gains. And then when more footprints present themselves, you'll now be able to have a much more accurate understanding of what you're looking at. But for right now, we know we're in a sell week structure. We got that peak formation at the highs. We got that break of structure. We got that impulse move. Our first one, remember, generally this will occur for about 2 to 3 impulse moves to the downside before we get more upside and clean out any more orders, or maybe something fundamentally might shift. The only thing we need to worry about is not so much, are we in the second or third one, is are we locking in our gains and are we locking in profits? That's it, man. As long as you can do that, that is the most important thing. It makes no sense catching all these moves and then you're just giving it all up because you're trying to time everything. Just lock in your gains, let more price action unfold up until you can make another more logical decision, accurate decision, and then you go from there. But right now, based off the information that is currently presented to us, we can look to take it to the long side. When a short opportunity presents itself, we'll take it to the short side. And then we'll look to see, okay, this is as far or as low as we can run the trade, time to liquidate our positions, and then we just wait some more, see what happens. Are we going to get that accumulation zone? Are we getting that inefficiency at the lows? Price can't seem to clean out that lows. Did we get that fake out? Or are we getting more confirmed ranges and breaches outside of those ranges? We can look to take it more further down. But generally, we'll identify accumulation zone when these lows are constantly being put in. They're not being taken out. There's that inefficiency in price action. And you get that fake out. Sellers get trapped, and then buyers get cleaned out at those lows, and then boom, it's off to the races to the upside. That is our bi-week structure, and then we will look to take longs. But that is when that happens. That is not. We should not stress ourselves trying to anticipate that when it's like far off into the future. We'll know it when we see it, to put it lightly. But yeah, these are some of the ideas that we're working off. So if we expect some upside for gold, how far it could go, nobody fucking knows. But let's just keep things simple. Let's see how it reacts off the 1900, or how far we could run it. Like, we'll know that maybe it's time to bail out of our gold position the second you just get that shit done again. Maybe that was a stop hunt. But for right now, we're looking for upside in gold. That means the dollar is going to sell off. Look at this nice clean range. That could be a stop hunt for the dollar up there. And we might get some continuation to the downside. It might clean out that zone where Cris has. It might even go fucking lower, past the 91. Who knows? But based off this, the dollar might sell off. Gold might go up. Risk on currency pairs will go up. So now that'll give us some ideas of what we need to be